So I'm the Director of Financial Literacy for Indiana University. So basically my role is to help implement financial education programming for students, faculty, and staff, just with the aim of trying to help people make more informed decisions when it comes to their finances. So the Money Smarts is primarily like the student-branded program that we do for financial wellness. Usually when we talk to faculty or staff, it's just under the umbrella of the Office of Financial Literacy, but Money Smarts just tends to be the more I don't know, personable, approachable version of the Office of Financial Literacy because students don't really respond to that as much. It's a pretty boring title. So basically what it means is that if you have student loan payments after you graduate, obviously you're paying on both the principal and you're paying the interest as part of those payments. The way things are structured right now is that whenever you file your taxes, you can deduct the amount of the interest that you're paying on those student loans off of your taxes. I believe the number is like up to $2,500 worth of interest. And so basically what that means is that every year you file taxes, however much you pay in that interest, you get a certain amount of money back off your taxes as a result of that. So, and that's going to be the issue, is that you might be paying, or you might end up paying more as a result of this. You might end up paying less. And this is the fun part about the financial, education world, is that a lot of times when people have questions, the easiest and most often answer we get is it depends. Because it's like, it depends on your current loan situation. It depends on your income as well. Because in some cases, if you make too much money, you can't even qualify for it. So it's possible that as a result of the changes, it actually benefits you financially, just not specifically on the education front. But when it comes to doing your taxes, the amount of money you might get back could be more. But at the same time, if your situation, I guess you could say, is a little bit better off, you may end up having to, or you may end up being, hurt on your taxes. So we do a lot of different things. I'll start actually by saying outside of our office, you can obviously talk to financial aid at any point with any questions you have about your specific student loan situation, and just see what kind of options you have. If you're worried you may not be able to afford your minimum payments, they can kind of detail the different types of payment plans you can go on after you graduate. With our office specifically, what we do is we provide one-on-one appointments for any student that wants to talk about their own personal financial situation. So in regards to this, we'll talk to students about setting up a solid student loan repayment plan, and just kind of show people, this is what you can do if you put a little extra money towards your debt per month. We can talk about that. We can just talk about budgeting for those debts. We can just talk about savings if you don't have much debt. Like basically, we can talk about anything within the personal finance spectrum as it relates to a student's personal financial situation. We'll also talk to students in group presentation form. So our group of students will also go out to various organizations on campus and do presentations that are, on a specific topic, but I guess a little bit more generic, relevant to a student's personal situation. So we do that. Then actually a couple weeks ago, we launched a new financial wellness platform called Money Smart to You. So any student in Indiana University can enroll in the course. If you're a first-year student, you're required to do it, the first-year course. But any student can go in. It's based in Canvas, enroll in the course, and just take it. Each one takes about 30 to 45 minutes. And right now they're segmented out so that it's segmented out based on what year you are in school. Okay. So if you're a first-year student, we have a first-year course, sophomore course, junior, senior. One's for students that are getting ready to graduate, and then one's also for students that are considering graduate school. One of the big things when it comes to student debt, I think a lot of students are a little bit more paralyzed by it than they should be. And this is not to discount and say that, if you have $30,000 in student loan debt and you're paying $300 and $355 a month after you graduate, that's not a big deal, because it's definitely a big deal. But at the same time, and this is speaking, between my wife and I, when we graduated from, when we got our master's degrees, we had about $110,000 in debt. It sucked, but at the same time, 10 years later after we graduated from college, it's totally benefited our lives. It was a struggle, and it made for some difficult times during that process. But at the end of the day, as long as you persevere, pay off your debts, just focus on getting rid of it as fast as possible, it significantly opens up doors. So don't necessarily just focus on the fact that you have to pay this money each month. Think about what it's going to afford you, once it's all gone. The other misconception we get from students is often around the idea of credit. We have a lot of students that are just constantly coming to us asking how they can improve their credit scores. Credit scores are an important thing, but at the end of the day, it's just a 3-digit number that tells you how good you are at borrowing money. What we'd rather you focus on is just your credit report. And the way we look at this, your credit report is just detailing all the things you've done in your financial past that would indicate to somebody how good you are at managing your money. It's the relationship between credit report and credit score is the exact same as your assignments and your final grade in class. If you don't do your assignments, or if you don't, maintain your finances in a responsible way, you're not going to get a good final grade at the end of the day. So don't focus on this 3-digit score. Focus on building solid financial habits that'll get you to that good score. And so all the programming that we do is focused on helping you build good financial skills that can, if you're focused on your credit score, all the stuff that we're going to teach you will help you get to that point without you actually having to focus on your credit score in of itself.